All right, market down on Wednesday. The president is going to give what we're told will be his closing argument on tax reform. It's a speech scheduled sometime Wednesday afternoon. This at a time when Barron's is saying the S&P 500 still has a lot more juice to run, maybe another 7% at a minimum. Barron's.com editor-at-large Jack Otter on what sectors benefit from that. But first, Jack, on this planned speech, we're told the closing argument, it so happens to be the same day. The conference committee really, puts the pedal to the metal and then gets hopping to get something to the president's desk by Christmas. All doable?
That's a very good question. I suspect that the political, importance to Republicans of being able to end this year saying we accomplished something will override other concerns, and so therefore it may very well be doable.
All right, let's talk a little bit about what you guys, when you have your conferences and events, what are people anticipating out of this? Particularly on the corporate front, that's where they expect to see a lot of bang for the buck because that's how this was all originally constructed. I almost get the feeling the individual rates were an afterthought, but that's just my personal thought. But what do you think?
Well, first of all, I agree with your personal thought. I mean, so you know where we are coming from. Barron's had a cover story last year that said lower the corporate tax rate to 22%, so we're kind of close to the president. We agree. I've just come out of a fascinating 3-hour discussion with about 5 top-ranked advisors from the Barron's list. They also support the corporate tax break mostly, but one guy described the personal side as, I think I'm quoting accurately, a thoughtless amalgamation of lobbyist wish lists.
So not a fan of that. On the corporate front, the big deal has been made, and I guess one of the reasons bandied about for a lot more run in this bull market to go. Morgan Stanley, in fact, last week, remember, had said, we're not even close to anticipating the run-up we could get from this, another 50%, et cetera. Do you think that people are just hoping that rejiggered multiples lead to a buying spree just on face value?
Well, I think the hope is actually that earnings will increase because remember, post-recession we had
wouldn't that be factored in other words?
Well, that maybe multiples will stay the same and earnings will keep on going.
But again, something factored in. If you're buying stock
I see what you're saying.
based on that, wouldn't you have already factored that in?
Yes, but there's always that little arbitrage between the hope that it gets passed and the actually getting passed. So I think we'll see a little bit of a bump. Also, there are lots of complications, so we're going to have to sort out what it means. For instance, I just learned that MLPs, Master Limited Partnerships, may see a nice little tax break tucked in there where it's kind of complicated, but instead of paying ordinary income when you finally realize the gains, it might be like a 25, 29% rate, which would be a little bit lower than the top marginal of 39. And so they could see a bump. And we just recommended EPD, one of the sort of better run MLPs out there anyway. Berkshire Hathaway could see something that we reported this weekend, which is that Buffett has a lot of deferred tax liabilities in Berkshire Hathaway. So suddenly, if he has to price those at 35%, if it goes down to 20%, that will look better. Banks should do well, and it's not completely priced in, we don't think, partly because banks have been so hated right after the recession. Now they've got lower regulation. If the Fed has to hike rates in response to any stimulus from this, that's actually good for banks. So they could get a lower tax rate,
a little more cushion with their loans, and
less regulation, and so they could really benefit in a triple threat.
I was just wondering the corporate thing because I always look, Barron's sort of will get under the hood and look at the corporate rate that we're told goes from 35 to 20, maybe 22%. But that's not, it's sort of like the price of a car. That's not the price that people are buying it at. So it's actually in the mid-20s, but potentially even lower for some sectors, right?
Right. So Ed Yardeni has just come out with an interesting analysis where he did very simple math. He just looked at all corporate profits, what they paid in taxes, did the math over the last 4 quarters, and said that the effective corporate tax rate was 13%.
Really?
Which
the effective one that's the average for all business?
Yes. Now, because large corporations...
This would be higher than that.
Exactly. So, in other words, with a lot of large corporations, this is no big deal at all. In fact, some, because of territorial changes, could see a hike. But again, as an investor, if you want to see who will benefit, look to retailers, banks, small caps, because some of these smaller companies, they don't have overseas places to hide their profits, so they really will see a benefit. But it's going to be a very different benefit depending on what kind of business you're in.
You also were noting during the break this distinction between the real estate industry and real estate developers. Talk to people in real estate in Florida, they're going nuts It's a big draw for Florida real estate. It's been having a noticeable pop in activity because it might be a haven for those who are being taxed out of their own high-cost states. But for developers, it's a different beast. Explain.
It's a really nice time to be a real estate developer. I don't know if you have any theories as to why this tax bill might favor real estate developers, but to give you one incredible example, on the personal side, my wife and I had our third child. We had to sell an apartment, move to a house, so we paid some capital gains on the sale of that apartment. Lucky us that it went up.
Sure.
If, however, I had been the owner of, say, a luxury condo, and I sold that and made a tidy $50 million profit and rolled that into a new building, I would pay no taxes. Now, eventually...
Even if you made a substantial profit?
Huge substantial profit, as long as
you
rolled...
Is that in the tax code? Is that something that was already out there?
Well, that's already out there. But
okay.
The interesting development is if we get rid of the estate tax, that money would never be taxed. And so it's looking like real estate development could be a wonderful tax-free industry. So if you're thinking of a career change, Neil...
You never know.
I love your TV
Sometimes
work,
they always suggest one, but I mean, you never know. All right, that's wild. Jack, thank you very, very much.